Hello, dear friend, dear lovers, dear followers of this Patella TV. I'm called Benone. We warmly welcome you on this learning and training platform about business courses. The subject we're going to learn is forensic accounting and auditing, and listening today we're going to continue learning about the introduction to forensic accounting and auditing with the following topic. We are going to differentiate between auditors and forensic accountant, or auditing and forensic accounting. Dear friend, dear lovers of this Patella TV, make subscribe, like and comment on this Patella TV. So we are going to differentiate those two terms, auditing and forensic accounting. So auditing, as usual, is independent examination of books of account and vouchers with a view of forming opinion whether are kept properly according to the company's acts and statement, showing a true and fair view about company's state affairs. This is a definition of auditing as independent examination of books of account, independent examination of the cash book, of the asset ledger, of shareholders ledgers, and the vouchers with a view of forming opinion whether are kept according to company's acts and statement, showing a true and fair view about the company's state of affairs. But forensic accounting is application of specific skills such as skills in accounting, skills in auditing, in finance, quantitative method, research and investigation skills, and application of knowledge about area of law, and combining those skills and those knowledge of law to detect, to analyze, to collect evidential matter. The forensic accounting would include the audit of accounting records in searching for evidence of fraud. But in auditing, we are making independent examination in searching compliance and preparing financial statement. Forensic accounting, it also includes the gathering of non-financial information such as interviews of all related parties to a fraud when applicable. But in auditing, we don't have to gather non-financial information. What the independent auditor are going to examine in auditing are financial information. Forensic investigation is examination of record to detect a fact related to allegation or theft to the fraud. But in auditing, what we are going to examine is to examine the records, the accounting records, but to get facts about to the comprehensive company's acts, about to the true and fair view of company's asset. The auditor is hired by shareholders to provide his opinion on the subject matter and are affected by the engagement term and the materiality. For example, an auditor should include a statement that some material may not be detected, but a forensic accountant is hired by the council, may be hired by the management of the company, may be hired by the third party of the company to maintain the privileged communication, to give them communication about the fraud in the organization, about how the business is running, and it does not affected by the engagement term and the materiality. The forensic accountant is not hired by the shareholder, but the auditors is hired by the shareholders. And the auditors is not hired by the council or the management or the third parties of the company. In audit, auditors reject evidences as being immaterial. In fact, smallest item cannot be relevant in auditing. The auditor follows materiality concept. But in investigation, in forensic accounting, auditor does not reject evidence as being immaterial or not. In fact, the smallest item can be the largest clue to the trap. In auditing, the objective of auditing is to make sure that the financial statement as a whole are free from fraud and errors. But in the forensic investigation or in the forensic accounting, is performed to obtain relevant data to see if fraud was committed or not, and who committed fraud. This means that in auditing, the fraud may be committed, but auditor not showing it, because the fraud may be committed through to non-financial information, but the auditor is examining the financial information. But in forensic accountant are here in the organization to obtain relevant data to see if the fraud was committed or not, and who committed fraud. The auditor's role is to report on affirmations of financial statement and on internal control system, but the forensic accountant's role is to report on legally obtained evidence with explained foundation. The forensic accountant report on legally obtained evidence with explained foundation. In auditing, if you suspect non-compliance with material respect, you need to retain auditing expert. In forensic accounting, if you suspect fraud, you need to retain a forensic accounting expert. Auditing based on international accounting standard, international audit and assurance standard, or general accepted auditing standard, in international financial reporting frameworks. But in forensic accounting, a fraud investigation to prove or disapprove In forensic accounting, the practitioner develops the recommendations based on the evidence discovered, while in auditing, where auditor may develop recommendation based on international auditing and assurance standard or international financial reporting frameworks or general audit accepted standard. Auditing detect and prevent fraud at lowest level, but in forensic accounting, a fraud investigation to prove or disapprove a fraud at a higher level would be a part of the forensic accounting. The auditor, the allegation or suspicion are not case to start audit. When in the company suspect fraud, the company are not going to start an audit. In forensic accounting, the forensic investigation is begun with allegation or suspicion of fraud. But when in the company there is suspicion of a fraud, the forensic accountant are involved to prove or disapprove those frauds. The audit is performed by CPAs. But the forensic accounting is performed by multiple discipline team expert, often includes the CPAs. The forensic accounting may be performed by CPAs, by layers, by mathematicians. The multiple discipline team expert is who performed forensic accounting, because the forensic accounting require more knowledge. The appointment of auditor is made by the shareholders of the company. The shareholders of the company are who appoint an auditor for the company. In the forensic accounting, the forensic accountant is appointed by the owners or management or council or third parties. Auditing is recurring, means that auditing is conducted annually, but forensic accounting is not conducted annually. Forensic accounting is non-recurring. Forensic accounting exists to collect, to analyze, to evaluate, to prove or disapprove fraud, or to analyze to evidential matters and interpret it and communicating it to the public debate or use it in the court of law. Dear friend, dear brothers, thank you for watching this video. Our lesson is stopped here, but we have to continue tomorrow with other topic remaining to this lesson. Thank you for watching. Do not leave without subscription on this particular TV. Make subscribe, comment, share video in order to get more videos about to this lesson. Thank you. God bless you.